Welcome back to Trading with Tony, and in this video we're going to talk about how to trade rounding tops and bottoms, which are essentially a reversal pattern, but a gradual reversal pattern. Before I go into the lesson, remember to hit the thumbs up button and subscribe to the channel for more educational content on how to trade the markets. And if you haven't already, hit the notification bell, and you not only will you get to learn how to trade the markets, you can actually get notified every time I go live and trade the markets live before the market opens every single day. So hit the notification bell, subscribe, and hit that thumbs up button. Here's the lesson. So welcome back to Trading with Tony, and today we're going to take a look at rounding tops and bottoms. First, I'll go ahead and define that a rounding top or rounding bottom is simply price action that moves like this. And the idea is that in the case of rounding bottom, you have a market that's going lower, and then it just turns to the upside. And the reason is this. The reason that this is important is because it's not a sudden move. It's longer term. Kind of a shift in perception of value, if you will. And then what you're looking for is the beginning of the latest dip, and then a break above it. But you don't want it sharp. That's more of a reversal pattern, and this is more like turning a large ship. This is in theory going to be more of a sustainable trend change. Whether that's true or not is up for debate. But as a day trader, you're looking at this short term anyway. But most of the times when you around tops and bottoms, you hear it applied to weekly charts, like it will be a complete trend change of thought. But on short-term charts, we can apply this principle as well. We have a rounding top here after a nice rally. And how do we trade it? Well, around the top shows that we are starting to fall back down. We're losing momentum. We identify where the rounded pattern is, and we put a stop loss somewhere above it. And then on a break below that level, in this case, if it's $1, you're aiming for $1 below. You can see that this area here is almost like a neckline within the head and shoulders pattern. And you may be familiar with that pattern. If not, check out my video on how to trade head and shoulders. Okay. Now this is basically a trigger point. So this is a rounding top, and you can see that we've broken through the bottom of it. You can make an argument for about 40 cents. So that should be about 14.20. And that's exactly where we went. So you can see that it's a one-to-one trade. You can also use them for longer trades for the rest of the day. So if you get a rounding bottom at a major support level, for example, you could really see a changing attitude. There's a rounding top there, and with a rounding bottom there, which reached out, I mean, barely reached down, then we collapsed. There's a nice rounding bottom because you can see that it takes its time. And once we break above that, it's a signal that we should get that 40 cents or so, and that's exactly what we got right away. Now, with all things, now this is JP Morgan. Let's go ahead and pull up the daily chart. Now, with all things trading, you know, you want to follow the overall attitude of the market. Now, something that I will point out is that where the market is as this was recorded, this is, you know, near a pretty significant support level. So keeping that in mind, you know, you look at the trading action. There's a little bit of a V bottom, but it isn't quite a rounded bottom. If it does kind of round itself, it might be reasonable to take the trade because you're lining up with the longer term support and resistance. In this downtrend that we're seeing on the 15-minute chart, and certainly the market has been selling off, you can see we have a rounded top, and we most certainly got our profits. They're very reliable patterns once you get that break, but trying to anticipate them, on the other hand, can get you caught up in consolidation, get you trapped in the wrong position. So keep that in mind. It's not something you want to anticipate. And, well, quite frankly, as a trader, you shouldn't be anticipating anything. You should be reacting. I mean, that's where a lot of traders do get into trouble. So here's an area that we have obvious consolidation and a couple of rounding tops and bottoms appearing. They're not and easy to trade in this scenario because we're so tight. But you can see that they did work out several times and time again. And think about what's going on. So in a rounding top, it's the opposite of a rounding bottom, and you have buyers getting involved, and gradually the market just isn't going in their favor. It's moving, not moving in their direction. It's not necessarily panic. It's just you're not making money. You've had this dead money sitting there. You might be down to 15 cents from here, for example. Well, once it gets to be 20, 25, 30, you start to see momentum picking up. It's more or less just, and I hate to use the phrase longer term, but it's a relative term in this case. But it's like a longer term perception that maybe this stock isn't going where we think it is. And therefore, in order to get out of a losing position, the buyers have to sell or the sellers have to buy. And that completes the reversal pattern.